Hello, I am Avinash Vikram. Today brief you about the KYC. KYC means know your customer. So basically we need to understand what is KYC, why it is implemented and how we can go through with the KYC. So basically KYC means know your customer. It is a simple process by which a bank obtain information about the identity and address of customers. This process helps to ensure that bank services are not misused. The KYC procedure is to be completed by the banks while opening bank accounts. Banks are also required to periodically update their customers' KYC details. KYC guidelines were introduced in year 2002 by Reserve Bank of India, and it is mandatory for all the banks. These guidelines are issued under Section 35A of Banking Regulation Act 1949. When we talk about the KYC documentation, so there are so many documents which are prescribed by the banks for the completion of KYC procedure. So bank need two types of documents basically, one for the identity, another for the address along with a recent photograph. So while opening a bank account, a customer need to present any of the 6 identification documents and approved by the Government of India. It may be any of the from the list, that is PAN card, passport, driving license, voter ID, Aadhaar card, Manrega job card or Narega job card. Any of these documents contains address is sufficient for opening an account. These 6 documents are declared as officially valid documents for the purpose of producing proof of identity. So these are the valid documents we need to submit for the KYC procedure. Now there are various types of KYCs. One is eKYC. eKYC is the simple procedure of KYC in an electronic form. It is possible for only those customers who have valid Aadhaar card number. So this is basically a biometric authentication with the help of bank branches or business correspondents. The UIDAI then transfers your data in a comprising of name, age, gender, photograph in an electronic form to the bank. Thus the information provided to bank is in an electronic form. This is called eKYC and this is under PML, that is called Prevention of Money Laundering Rules, and it is a valid process of KYC. Another format is CKYC, that is stands for Central KYC. Central KYC is basically a uniform norm with the KYC registry across all the financial sectors that has been set up as a depository for KYC records. This is a new process without asking customers to provide multiple KYC undertakings, which will help banks, mutual funds, brokerage firms and depository participants that offer various services. After complying with this new CKYC norms, a unique customer identification code is generated and that will be used whenever KYC is required. This is an initiative started for the purpose of centralizing and streamlining KYC process. Duplication of KYC will be avoided after this process. The government has authorized the Central Registry for Securitization Assets and Reconstruction and Security Interest of India (CERSAI) for performing the function of Central KYC Records Registry. The main objective of KYC is to stop money laundering, terrorist financing, or we can say the terrorist funding, and to understand their customers too and to avoid any risk in the future. Thank you.